about a further slowdown in Europe at this point?
We're not actually concerned about a further slowdown. What we think the market is actually missing is a lot of these countries are actually moving from austerity to a pro-growth stance. And when we think about pro-growth, we think it's not building bridges to nowhere, but it's more about implementing regulatory reforms that will enable markets to grow. And the ECB and all of the involved European parties are actually giving these markets enough time to implement these policies. They're kind of giving them a little bit of wiggle room.
So with that in mind, how do you look at the portfolio differently and maybe get into a less defensive frame of mind than you or some other investors have been in?
Yeah, if we look back at last year, we saw a lot of opportunities in the northern region, and they were the export companies, so companies that sold their products basically everywhere but Europe. But now we're starting to see some really good opportunities in domestically oriented names. A lot of those names have been suffering under the austerity bias that we've seen in the European region, but as you start seeing these pro-growth policies and you start seeing Europe starting to grow, they're the types of names that we think are going to be good performers going forward.
So give me a few examples then.
We own Kingfisher, which is the Home Depot of France and the UK, and it trades at a single-digit multiple, which we think is attractive. It also has the benefit of self-help in terms of it is moving more towards own products. So we like Kingfisher as a domestically oriented name.
What else do you like?
We like Safran. Safran is an aerospace company, and it basically has a number of engines that they put into service 10 plus years ago, and those engines need to come back into the shop to get fixed. Safran earns about 4 times the margins on spare parts sales than it does in its actual business. So we think that the earnings trajectory of Safran is going to surprise the market.